Okay, everyone, Property Pursuits, we're back. New platform, not Zoom. Hope you like this. We're going to be trying to get fancier. We'll have multiple camera views. We're going to use something called what, Michelle? StreamYard?
OBS Studio.
OBS Studio, because we're fancy. So fancy, I don't know what the name of the thing is. But what's really fancy today is Sherrie's here. So Sherrie's an escrow officer in Reno. She's been doing this 20 years in Reno.
Yeah, a little bit more than 20. Yeah, all here.
And she recently made a big move.
Big.
So Sherrie was with First Centennial forever, and now?
I am with Stewart Title.
How's it going?
It's really good. It's really good. Change is hard. I don't know a lot of people. I don't know a lot of
you. It's supposed to feel like a dildo straight at your face.
I just want to feel like a rock star.
Not that I've ever done that. I really haven't, actually. I don't even know like what a real life.
Where did that come from?
Well, these mics, I call them the dildos because I don't like them. I really dislike them. But I always call them a dildo. And if I'm being really honest with you, I've never seen a dildo in real life. So I don't actually know if that's what they look like.
This just got weird.
Sorry. Please proceed. Let's go back to talking about very professional things.
What I was going to say is change is hard. I don't know a lot of people, especially my age, that really embrace change. I was telling you, I don't even change where my furniture is at home. You know, I did when I was a kid, but I don't like it anymore. Maybe I'm like the blind dog that just wants its familiar. So it was a very big and difficult change, but it's been a blessing.
I'm so excited for you.
Yeah.
I think this is the year that you got to make changes in your business.
And I think normally when someone starts that question, there's like a loaded question behind it. So was there anything else, or should I just cut to it?
No, cut.
There's no reason. Everyone, I've gotten that question a million times. There's no reason. I haven't been done wrong. I love my family at First Centennial, and they have been good to me. It was a good run. It was about 18 years, and it was just for me. I made a change for me. Yep, and I'm loving it. I have a new family that's embraced me. The support, the technology, everything that's there. I have a great team of assistants and management, and I'm really glad. I'm really happy.
I think that we can get into like ruts by simply just doing what's working.
Yeah.
And never trying to mix it up. It doesn't always have to be something bad that sparks a change.
It just starts the conversation. People like create this buzz and there's no buzz. There was
people are always seeking gossip.
Yeah.
Especially in the Reno.
Sorry, there wasn't anything to share.
You might show up and the next lady whistle down that comes out. I don't know, because I don't know who writes it. But I think it's true that people thrive on there being some sort of gossip that happened or something, when it's not always the case. And I have a lot of respect for just wanting to reinvent yourself for the sake of getting better at what you do and offering a better service to your referral partners, for your clients, all that. So good for you.
Thank you.
Now, I got a lot of stuff I want to talk about with title before we move past this. So I'm not going to let you out of the hot seat for a long time. Are you ready?
I'm in it.
Okay, so when we talk about title and escrow fees, I don't think people are always all that familiar with what's actually happening.
That's fair.
And it's kind of like the conversation with realtor commissions, that didn't really happen until last year.
Right.
And it was a large item on the settlement statement. Us in the lending space are unused to every little fee being like under the microscope and people like
having to justify it,
shopping us and commoditizing us. But the truth of the matter is the bulk of closing costs are title and escrow fees. It's a lot.
Well, yes and no.
I guess if your lender's charging you a lot.
I mean, I think yes and no. I think that when you generally, I find that it doesn't matter which side of the spectrum you're on. If you have a $15 fee, it's like no big deal. But you see a bigger ticket item, you're like, what is that? And it's fair that no one really brings it up. When you get down to it, title and escrow fees are truly just your escrow fee, your title insurance policies, and any doc prep. However, when you see the settlement statement, you're going to see everything. And so a lot of people will look at those transfer tax fees and things like that as a title fee, but that's not. That's the county charging a tax.
Right. Because transfer tax is a big one. Yeah. It's $2.05 for every $500 of value.
Yep. I look at it as $4.10 for... Yep, but tomato. Yep.
Oh, because I'm only looking at my side.
You're $500. Yep, but I do it $4.10 per thousand. But you're absolutely correct. Title insurance is title insurance. At the end of the day, That is a big ticket item for a seller. A seller is purchasing title insurance to ensure for that buyer that they're going to have a clear and marketable title that they can turn around and sell without any issues. You don't have to get title insurance, but are you willing to take that risk? Are you willing to buy a house without homeowner's insurance? Homeowner's insurance is expensive, but those are risks and that you'll have to.
It's protection.
Yeah.
That's advised that you have.
Yep.
Well, you have to get title insurance if you're getting a loan.
Yes, and that's where I was going to say. And then if you're getting a loan, then you have to get title insurance. That lender wants the protection for their investment until it's paid off. So as long as you have that loan, that you only pay the title insurance once. So if you are that rare person that takes out a loan and keeps it for 30 years, you only pay one title insurance. But if you bought the house and how do you say it? Bought the house, buy the house, marry the house, not the rate. That's not true.
No, well, and it's like,
you know what I mean? Okay. You find the perfect house, but interest rates might not be where you want them to be. So you buy a house, you get a loan, and then interest rates are going to come down because Shivani says so. And you refinance. Well, I didn't say that you said it. I just mean we're going to will it. We're going to will it.
I do say it.
And then you do a refinance. What I'm saying is that you have to then buy another title insurance policy because that's a brand new loan. So there are costs, but I don't think that title and escrow costs are astronomical. And then when you talk about an escrow fee, I mean, as long as you have a great escrow officer like me, just kidding, then it's well worth the money. I mean, our job is to be that neutral party, to follow the written instruction, to be the intermediary, to make sure that the written instruction is followed. And that fee is split 50-50. I don't think it's really high. It's all based off of your purchase price. So if you're buying...
Do you think it varies a lot company to company? Like, do you think this is something that buyers should be more aware of in like putting their preferred escrow officer or shopping like escrow fees?
Honestly, no, because I think that title companies here in our market want to be competitive.
So all the fees are pretty in line.
Yep.
So then what is the real difference between the companies? Is it the relationship you have with your escrow officer, basically?
It could be a big part of that, because I think that can make or break a deal, just like a lender could make or break a deal. But I always say that it's really is the quality of a title company is based off of the insurance policy it's written on, right? Does that make sense? So because that is what's going to follow you long after the deal has closed, is what is that title insurance policy worth? Is it a company that has been around for a long time? Stewart Title has been around for a long time. Stewart Title was my underwriter even at a different title company. And there's a lot of comfort and beauty in that. But that is something that I think is way more important than shopping fees, is knowing the quality insurance policy of your title insurance policy.
Yeah, that makes a lot of sense. Mm-hmm. What about that optional extended title policy?
Yeah.
Like, who really needs it?
Well, I think that's going to come to play with some of the options, right?
Wait, let me give people background. So Sherrie explained that the seller, when you're buying a house, the seller typically pays for your owner's title policy, unless you're buying from a builder and not using their preferred lender, in which case they're going to dump that fee back to you. But typically, 95% of transactions,
yeah, most commonly. Mm-hmm.
The seller's buying the owner's title policy. You're paying for the lender's title policy.
Correct.
On the owner's title policy, you're going to see an optional Alta extended coverage line item.
You said it right. Great job.
So who needs that?
I always will tell a buyer that it goes case by case, and then we're going to go over it. We're going to talk about it. There are a lot of benefits in that optional policy that come with a very small price tag. Again, it's going to be based off of the sales price of the home. So if your purchase price is $5 million, that Alta Extended is going to be more expensive than if you're looking at a $100,000 home. But the benefits that come in there for that small fee, and again, it's a one-time fee. It's not like annual homeowners insurance where you have to pay it over and over. It's a one-time fee that's going to cover you as long as you own the home. What are the things that are important? You know, that I always say that coverage is, it's like being offered vision insurance when you're 18 and your eyes are good. You're like, I don't need vision insurance. I don't need it today. I probably won't need it later. Well, I'm here to tell you, you probably will in some way need vision insurance. And it's all of those unknowns. So with that Alta Extended comes protection for forgery. We here with local title companies, I feel like we have all really aligned that if someone is not signing in our office, they're signing with a vetted notary. What that means is that somebody has had a background check, they're licensed and bonded just like I am. I always explain that you're signing with someone that has to go through everything that I do to be an employee here at the title company. That's important to make sure that you have the right party in front of you signing, both for the lender to make sure that you have the right party signing your loan documents. But in a title company, because we're issuing that title insurance, we want to make sure that we have the right seller in front of us. So there's forgery protection. How many times do you see someone that comes in, unless you have gone through the process to be able to lend to them in the name of the trust or an LLC, where they come in, they buy as their individual self and then roll it into some sort of entity? That coverage, it's technically an ownership change, right? When they do that, that deed transfers the entity name and that coverage, the owner's policy that the lender, or rewind, the owner's policy that the seller's purchasing for them is covering them, not only them as an individual, but now into the entity. So it rolls to them without have to purchasing another title policy.
That's huge.
That's a big one. It covers for permitted or non-permitted work. If there was a violation and it came back from the county, there's coverage in the title policy, CC&R coverage for any. So sometimes you're not part of a homeowners association, but you still can get a violation from the county. A lot of times when that home is no longer a seller's home, they're like, not my house, not my problem. But the title insurance will then afford a buyer protection, both whether in a homeowners association or not. I've seen that come into play and be huge for people. Let's give a scenario. Seller gets ready to list their property and they are part of a homeowners association and they want it to look good. So they start to do some improvements, but they didn't get them approved by the homeowners association. They sell the property. A violation from the homeowners association doesn't come in until after the property has transferred names. So now that's that buyer's problem.
They own that house. That's in violation.
Yep. So there is a ton of added coverage for a relatively small amount of money, but it is an optional policy. I only give a buyer those details so that they can make an informed decision, not just say, well, why is there $200?
How often do you see people decline title? Like not just the extended, but like, do you have cash buyers that don't get the policies?
I mean, certainly. I find that generally it comes down to down payment. If someone is really struggling to come up with the funds to close, then it doesn't matter what I tell them. But when I lay it all on the line that you're getting this much coverage for as long as you own this home for $150, $200, $500 if it's a real high priced home, it's hard to.
But when you have cash buyers, they got money. They're paying cash for this pretty big asset. Yeah. Are you finding that they're still buying the title coverage because they're savvy and they know it's worth it?
Yeah, but then, yes, I think that more often than not, if you give them the education and let them make that decision, not that you're trying to sell them on anything, because that's not the case. If you give them the all of the facts and let them make an informed decision, they're like, this is a no-brainer.
I have another question.
Okay.
So I often worry about, or have put a lot of thought, I wouldn't say I worry about it, but I've put a lot of thought into AI and how it could replace pieces of the real estate puzzle. Mm-hmm. I think that AI will get better than the best loan officer at figuring out a very complicated income strategy for, the self-employed borrower with, the real estate developer with 15 LLCs with pass-through income that are all just shell companies. Like, I think AI will get there and can do this stuff. I don't think AI could ever replace a realtor because they facilitate too much craziness. What do you think about AI or blockchain replacing title? Because it is a neutral third party in the transaction. Couldn't a computer just be neutral?
This is one of the many reasons why I love you, because who even thinks about this stuff, number one? And number two, maybe I'm naive, but I don't see how it could replace any of us. What you just mentioned, title, agents, even a lender. There's so much more that goes into our jobs behind the scenes that we normally have that Wizard of Oz screen up.
Right.
We don't let our customers see the work that happens behind the scenes.
Oh my God, that's such a good point. June said it the best one time. He said, you have a good lender if you don't know how many times you died on the table. If that lender was like a freaking surgeon and they had the paddles on you and they resuscitated you and you were asleep for the whole thing and you wake up and we hand you keys at title and you're just smiling and you think it was all great. You don't even know your loan was denied. You died like 3 times and everything just comes together at the end and everyone's happy.
So I answer your very bold and mindful question about can we be replaced with AI? I mean, maybe I just don't see it, but I don't see that any of our roles could be replaced with artificial intelligence. But specifically with a title company, I mean, we've all heard it that there's offshore operations that are doing title work. And certainly they can in those cookie cutter situations. Here in Northern Nevada, not only do we have cookie cutter with different subdivisions and things like that, but we also have a lot of meets and bounds, really difficult searches, having to take searches all the way back to patent. And unless AI can read cursive, really bad cursive at that, to research some of those documents that are on microfiche, I just don't see where it could happen. I think that that's where, again, the power of a title policy is within not only the escrow side that brings it all together, but a really strong title department.
When we have guests on the podcast, it seems to be that we must be choosing really high caliber of people to come talk because you guys always show up very prepared.
Well, you say that, but first of all, I didn't know there was going to be a camera.
You thought it was
Second of all, I didn't know what we were going to talk about. So
but you did come with tips to avoid delays, so let's do them.
Are you sure?
Yeah, go.
Okay. Well, I thought what better to talk about than 3 simple ways to avoid delays in closing.
Yeah, because nobody wants to be delayed. It creates so much stress for everyone.
And again, the things that happen behind the scenes that we don't talk about. So let's just talk in a lending world, right? That we don't have a cash transaction. When you start to vet your buyers, you're getting, just like that lovely lady that was in the lobby, you're getting some upfront documentation, including bank statements, right? So you've vetted their bank accounts. I think a big thing to talk about is when they bank with Podunk Town Bank in, someville back east, but they're moving here. That's a great time to talk about what does your bank require when it comes time.
Have to be in person to send the wire. Yeah,
sending a wire in person, even a cashier's check. Even if their bank will allow them to request a cashier's check to be overnighted, Nevada's a good fund state, right? So what that means is that a wire transfer is the only true good funds. Most title companies are going to allow to receive a cashier's check, but it has to be drawn on a bank in Nevada because Nevada's a good fund state. So when you get an out-of-state cashier's check, that's like basically getting a personal check. So it's really good to be mindful that if they aren't with like Wells Fargo or a bank that might allow them to request a wire online, having that conversation. I think that's good for everyone because there's nothing worse than you locked a loan, everyone's ready to go, and then they're like, yep, I've got my funds, and a cashier's check comes in from Mississippi where it's out of state. And now we're 10 to 14 days minimum before we can close.
One time I had to call Sherrie about a file that wasn't closing, and she had to explain to me how we can't close on an IOU.
No.
I called her on Facebook because I didn't have her cell phone yet. So I went into Facebook and hit call. And I'm like, they don't have the funds from their 401k. And Sherrie goes, well, we can't close on IOUs, sis.
Yeah. I mean, that is our job, right?
On my side, I have to make sure
all the money's in so that I can pay off a seller's loan. I can give them their proceeds. So, yeah, unfortunately, IOUs don't work. Neither does cash. So, I mean,
what are your other tips, or did we?
Nope. Simple. It's like the obvious thing. And you probably don't have to experience this all that often because you guys are wonderful. But getting your invoices, your inspections, your home warranties to escrow sooner rather than later is so important because some lenders cannot, and and will not release loan documents until all of those are finalized to the penny.
Oh, this is why everyone's always asking us if we have to send a new CD for the buyer to sign, and we don't.
Yeah.
So other people's policy is
they will not release loan documents.
Do you think it's confusing that we release loan docs for our clients and then we balance with title again, because there is a lot of last minute stuff that happens and we don't want to hold up the process. And then escrow will ask us, are you going to send a new one? And we will. Balance again, funding sends a new one. But if you don't have it in time for the signing, I always preface by telling my clients, these are not really, the numbers don't even become final until after closing, which is why sometimes you get a small refund. But you're going to wire based off title settlement statement. You can review the closing disclosure. We'll talk about it. You're going to wire based on title settlement statement because that's the most accurate at the moment.
Yeah, I think it's just the regulations that every lender views those regulations differently. And that's why some lenders will hold up loan documents. Do I think it's confusing? No, I think that is the reason why you guys save the day so many times, is because, I mean, really at the end of the day, it's not the lender that's holding it up because we don't have a home warranty. It's the buyer not choosing the home warranty or the agent not ordering the home warranty. But still, we have deadlines and so much has to happen after you get loan documents that sooner is always better. So I think that that's a big one.
I think you brought up a good point, which I've said on the podcast a million times. My feet are so fully asleep. But it's that the only people who really benefited from all the regulations was the lobbyists who get to determine what lenders had to hire all these attorneys to decipher the rules. Okay, so last one?
Can I give you the last one?
Because I did this to poor Ken Lund. He had pages of stuff.
I don't have pages.
And then I would move past it, and then he got all jumbled. And Ken, I love you. Thank you for being such a good sport last time, for being so prepared.
Last one is just adding someone to title, right? You are going through the loan process, and someone wants to add their girlfriend now because they're not married and there'd be transfer tax, or a spouse has applied and everything, they've done everything, but it's just going to be way easier to put their spouse on. So you put on someone as a non-borrowing spouse. Having that information sooner rather than later is important, because with that comes really the requirement for an addendum. And the reason,
on the contract.
I've gotten pushback from some lenders why they're non-borrowing spouse. Here's the way I just want you to think about it. As soon as a lender adds someone to title, we have to match the deed. So when the seller sells the property to that buyer and their non-borrowing spouse, they're an owner. If they were going to turn around and sell it the very next day, who would have to sign to sell that home? Both of them. They're a purchaser. So it's just one of those things that finding that information out sooner rather than later is super helpful.
Okay, so it's mainly all tips for the lender and the realtor to make the deal not be delayed.
No, not really. We're all in it together.
But it's not the buyer who has to do that stuff. It's their...
Yeah, communication's key. But we as the professional partners should really be bringing it all together. Yeah.
I agree. Okay, so taking you out of the hot seat a little, but I want you to interrupt me as much as you want.
Okay.
You guys might be missing Sandy right now. I really am also missing Sandy, but she's sick. And I don't know why, but I've never been sick so many times in my life as the last 12 months. So I told her not to come and get me sick again.
Kids.
Yeah. No, oh, you're right. I do know exactly why. It's because Anju started preschool and a mix of AIDS and Ebola grows in the petri dishes of preschools. Okay. At the Smarter Hour at the end of last year, directly in the middle of holidays when people have way too much shit on their plate, I did a 2025 forecast because I really like to stick my neck out there and make a fool of myself and predict an unpredictable market. So here's some things I think we should be watching in case you missed that back then. There's a new wealth effect. So the wealth effect is that there's the whole thing about behavioral finance, right? And this is why I dive so deep on psychology, is because people have a relationship with money, whether they choose to acknowledge it or not. Every time the stock market is doing well, spending jumps. So like in 2023, we saw a big rebound in the equities market, and that led to $288 billion in increase in consumer spending. Every dollar that the stock market goes up increases spending 32 cents. And this is not because people actually realize any of these benefits. They don't withdraw the money from the stock market. They just feel better, so they book the vacation or they buy the new car or they take the risk. Start the new job, start the company, do the thing when the stock market's doing well. And this is also why Sandy and I saw a lot of move-up buyers last year. Is when the stock market was doing well, people had a lot of equity in their home, they felt good, so they moved up. there's a whole demographic of people who felt disadvantaged in the market, and it's the younger ones. It's the kids. Michelle's age, 18 to 29, think that they may never be homeowners because it's gotten expensive. The pace of wages hasn't grown with inflation. These are all very real things, but there's going to be a wealth effect that goes beyond the stock market in 2025, and I think it's the crypto wealth effect because 18 to 29-year-olds own the most crypto. Do you own any crypto?
I'm not a kid. But I think that...
I don't own any either, and I feel really bad about myself. But the 18 to 29-year-olds own crypto. Their homeownership rate is only 8%. I think that because they're feeling wealthy because of their crypto, they might feel confident in buying a home. So I think, well, I don't think, the data shows that we're going to see a jump in the home ownership rate for this age group going from 8% up 25 points to 33% over the next 10 years because they can use their crypto for a down payment. You can even use the crypto gains you have. If you claim them on your taxes, you can use them as income to qualify for a house.
Get out.
Yeah, that jump of 25% is 17 million houses being bought by this demographic. And then for reference, if we look at millennials, my old ass, we'll see 8.5 million homeowners in that age group over the next 10 years. Their homeownership rate will go from 33% to 55%. If you're in one of these age groups, pay attention to the wealth effect. If you're a realtor watching this, you just got your target audience for who you need to be talking to with your marketing. AI-powered robots might solve the housing crisis. I'm not kidding. They could build new homes. So nationwide, we're short. She thinks I'm full of shit. Okay, so we're short 4.5 million homes in the U.S., but you know, Trump's tariffs, specifically on Canada, where we get a lot of lumber, his mass deportations, it's not likely going to get better this year. But it's also not just a problem in America. Around the world, 1.6 billion people lack adequate housing. And it's all, according to the UN, due to a shortage of labor, a dearth of construction workers. So AI-powered robots could help.
Okay, I'm picking up where you're putting down now. I just was like, I didn't see it. Thank you for painting the picture.
There's a startup in Amsterdam called Monumental. They're working on it. Listen, their robots don't give a shit if it's raining. They never have a hangover. They're not the electrician's not going to not show up and then delay the framer and whatever comes next, right? The robots just show up. They do their job. There's a Dutch startup that had a robot build an entire house. Construction robots might solve the housing crisis. Maybe not in 2025. Maybe not in 2030. But it could happen, you guys.
You heard it here first, okay?
This could happen. We had a Fed rate cut last December, and on that same day, mortgage rates went up. Today is also a very tough day where the 10-year Treasury, if you watch the 10-year Treasury, it has a direct correlation to the 30-year mortgage interest rate. And when the 10-year Treasury is up, mortgage interest rates are usually deteriorating. Right now, we're bumping up against a ceiling that if we break through with the 10-year, we could see interest rates go back to where they peaked in October of 2023 in the upper sevens. So just, keep your pants on, people, and pray we don't break that ceiling. Just say to yourself, no thank you on that.
Please keep your pants on.
You guys don't have to wait for our monthly property pursuits to get your market update. I hope that this is the least boring market update you watch. What our goal is to give you whatever the latest real estate headlines are, whatever topics are trending, and tell you how they apply to you, how we're seeing them actually play out as boots on the ground. But we put a lot of effort into putting out this content all the time. Sherrie does too, don't you?
I try, but you are also an overachiever.
Do you want to do more content? No, there's a huge opportunity. Nobody in Title and Escrow is really doing content like
sidebar. I see a sidebar conversation happening. I'm going to have this one-on-one with Shivani where she coaches me up to be a better content provider. I feel it.
If you know Sherrie, there's a lot of people watching because I got all these clapping when I announced you as a guest. If you know her personally, then you know she'd be the best person to break escrow down for people on a very real level so that they could understand it. But back to interest rates being higher for longer. I think the people who are going to win now are the people who accept it. So I do think interest rates are going to stay in the 6s this year. I don't think we break the 5s. But what do I know? Last year when I gave my market forecast, I told you we'd get into the 5s. We never did. I will also say Wells Fargo, Goldman Sachs, all these people say the same things as me, and they turn out to be wrong too. So nobody really knows what's going to happen. But I think that plays into the strategy of who's going to win this year. And it's the people who figure out a strategy despite the interest rate. Because I want you to understand something. The interest rate's a big deal. It affects your buying power, your affordability. It affects how much competition you have out there. You will never think about it again after you close. You will just make your mortgage payment.
Yep.
Like, unless you're one of those dudes who brags about it on the golf course, who's probably lying or paid a lot of points for that rate anyways, you're not going to think about it again. So you don't need an interest rate strategy. You need a financing strategy where you have a monthly payment and a down payment that you can feel comfortable with. The people who focus on that and get a strategy in place will win this year.
I have something to say. I think that it's brave and bold of you to always be trying to put this information out and to make your buyers more informed. You're also giving agents and even me different tips and things like that. And you're not like the weatherman. Do you get what I'm saying there?
I feel comment, huh?
No. No. I've often said when I grow up, I'm going to be the weatherman or woman, preferably woman, because I feel like it's the one thing that you can do, and you can be wrong all the time and it's still okay and you can be employed. You're right
Sometimes.
quite a bit of the time.
Thank you.
So missing the mark once. You're not the weatherman or woman.
Thanks, Sherrie. That's really nice.
Thank you.
No
You're
one's
welcome.
told me that before. In terms of realtors and lenders, staying power is actually a big topic right now because in June of 2021, the number of licensed loan officers hit its peak at 178,000. Or I guess it wasn't licensed. It was the ones who had closed at least one loan.
One deal.
But by January 2024, that number's declined by half, 47%.
It's hard.
There's only 93,000 licensed loan officers. And I don't know the numbers for realtors, but I know it's a similar trend. There's a mass exodus. I think the ones that are going to have staying power. So in 2024, at the end of 2023, I predicted which realtors will do the best in 2024. And I was right on that. It was the ones who are trusted experts, the people who invest a lot of time in themselves in adapting with the changing market, learning new trends. To give you an example, it's like a lot of dinosaurs in the loan space wouldn't do the temporary buy downs. They were like, nope, this is giving me PTSD of arms.
Too much work.
I'm not going to explain this to the client. I'm not going to deal with it when they get their mortgage statement in year 2 when their payment goes up. I'm not doing it. And I think that limits people, and those are the people who probably need to retire because you've got to evolve with what the market is changing, and you need to be able to give your clients the best advice for that time. So I think what's going to happen now, the people who are going to have staying power in 2025 are the people who are the most honest, the people who take the client behind the curtain and they fully explain the commission thing, the lenders who say, let me show you exactly how I qualify you and the path I'm going to put together for you to get to home ownership when the other lender said no. I think it's the people offering the most transparency to the client, most honesty and most transparency around it. That's who wins. Sandy had a really fun success story for her clients, but I don't want to mess it up. So you guys are just going to have to wait for when she comes back. Sherrie was really worried we were going to talk too much and it was going to go too long. And what did I say to you?
No, we're going to nail it.
Because
we're hot chicks.
Yeah. When you have a male guest, they sometimes talk a lot. No offense to the male guests. We love you guys. And we really appreciate when you come fully prepared with pages of notes and graphs. Save the date, guys, for Mortgage and Mimosas, Reno's hottest real estate clique. If you're a realtor, this is open to you, or anyone in the real estate industry. If you're an insurance agent, title and escrow is always welcome. Join us on Valentine's Day, because who else would you rather spend the day of love than with me? I don't know if that was a joke or not. And also, Future is Female. We're going to be very timely with International Women's Day, and you can buy an early ticket or do a table sponsorship. It's going to be Thursday, March 6th, still at the Alma State. We love doing it there, but there's something really different about this one. We always have focused on empowering women as real estate investors and raising money for the Women and Children's Center of the Sierra. We're still going to raise money for them. We've hit like 60,000.
That's so awesome.
But this time, and this time only, we're going to do a very special series of speakers and topics focused on empowering women in wellness. I think you guys are going to love it. We'll still talk about money. I'm still going to promote financial literacy, but we're also going to talk about perimenopause. We're going to talk about advocating for yourself in healthcare and beyond. We're going to talk about fitness and why it makes sense to make time for it beyond what you look like. So I'm really excited, and we'll see you guys then. Thanks for tuning in today. And if you have specific questions and need to talk to us one-on-one, You can shoot them over in the chat. We'll answer you, or you can just book a meeting and we'll sit down with you individually or via Zoom. Talk to you soon.
Thanks for having me.